The broadcast is now starting. All attendees are in listen-only mode.
I'm going to spend a minute or two, and I'm going to introduce you to an amazing, amazing gentleman. I'm blessed, and you don't hear me use that word often, but I'm blessed to have him in my life. And his name is Rob Thompson, and Rob comes from the hallowed halls of the Ivory Towers with an MBA from the #1 business school in the world. While at Wharton, Rob started to launch his own hedge fund. Rob has a second graduate degree in management and international studies from the Lauder Institute, which was set up with a $36 million grant from the founders of Estee Lauder Company. Rob graduated 2007 and has not needed to work a job since, 1 year after graduation. Interestingly enough, he's also a member of Mensa, which is the Genius Society. So I guess it would be fair to say that Rob's a financial genius, and I'm just so excited to know this man. Rob also spent 10 years in the School of Hard Knocks. Hey, we've all been there, right? In private equity and alternative investments, including oil and gas, investing in commercial real estate, and other things. It cost him $250,000, 10 years of his life, and getting into the #1 MBA school in the world to figure out what he's going to share with all of us tonight. I thank everyone for being on this call. You'll want to have pen. You'll want to have paper. You'll want to suck in every nugget from this man. So with all of that said, I'd like to turn the time over to Mr. Rob Thompson.
Thank you very much for that warm, kind words as an intro. Like you mentioned, I am the founder of the Financial Freedom Foundation. Since each of the words starts with the letter F, our logo is the letter F and the number 3, F3. That's what we refer it to. The topic of the webinar is creating a 100K passive income within 12 months. So we'll dive right in. Most people would recognize this formula here, E equals MC squared. I learned it in 8th grade. The energy of an object is equal to its mass times c is a constant, speed of light squared. Einstein came up with that. And was he a genius? Yeah, I think he was a genius. But it's so simple. But there's a lot of complexity behind that, simplicity. We're going to liken it to money in this sense. The amount of money you create is equal to the mass of capital. We're talking about money, the mass of money you have, and the C is the compounding rate, the rate of compounding, and it's exponential. So there's an exponent component right there. So here's the mathematical formula they teach us at Wharton in Finance 601, and it's the annual income is equal to the mass of capital times 1 plus a monthly return to the 12th power. If you're calculating monthly returns, there's 12 periods, 12 months in a year, and we're looking at annual income. Minus 1 at the very end. The reason why it's minus 1 right here is because we're only calculating the extra money created, not the total amount we have in hand. So that's why you have minus 1 is keeping the principal in, and we're just looking at the money that gets created. Okay? So it boils down to this: mass of capital and monthly return, your return on investment. So the two levers of wealth creation are massive capital and return on investment. Just as simple. That's what it boils down to. So let's put some numbers behind it just to make sure it works. Now again, we're just assuming 100,000 because that's a magical number in people's minds. It's just a round number that makes math really easy. That's why I like to use it. But you don't have to start at 100,000. You can start at 10,000. You can start at 1,000. You can start at $10. It doesn't matter. You do have to have a little bit of massive capital to get started, and we'll show you how to build that up. But it's having a massive capital and assuming a 6% per month return. People think, wow, that's really high. It is really high. It's what I would call the elite traders are the only ones that can do this. And people say, you know, most traders can't do that. And that is the truth. The 99% cannot. I don't like the 99%. I just like the top 1% because this is the money that they're creating for me. And I'll show you how to use the same traders as well. So the 100,000, 6% per month return, 12 compounding periods in a year. simplify the math as 1.06 to the 12th power is 2.01. And 2.01 minus 1 is 1.01. So the math turns out to be your annual income, if you have $100,000, getting 6% per month return, is $101,000 a year in income. And if you earned those returns passively, then that becomes passive income. Okay? Ta-da! There you go, Einstein. So he came up with something called the Rule of 72. We did a whole lot of not complex math, some simple math, but we did a whole lot of math to figure out one thing. The Rule of 72. If you take, he called it the ninth wonder of the world. If you take 72 divided by the interest rate, that's the number of compounding periods, we're going to call it, because it can be years or months depending on what compounding periods you're looking at, for your money to double. So if you make 72% return, if you make 6% return a year, which is what most financial planners set your expectations at, 6% return a year, it would take you 12 years for your money to double in value. If you, let's cut that in half, make 36% return a year, it only takes 2 years, because 36 times 2 is 72. If you make 6% per month, or 72% return a year, non-compounded, then when you compound it monthly, it ends up being 100% return a year compounded. So you're doubling your money every year. Let's see if this works out in simpler terms. Okay, so again, a little summary here. That's how you create $100,000 in passive income within 12 months, plain and simple. I was working in private equity, and during that time, I thought I had won the lottery, being in private equity. But I got into the Wharton School. One of my colleagues said, getting into Wharton is like winning the lottery. I said, what are you talking about? Getting into Wharton like winning the lottery? He said, because you can write your own ticket forever after. I thought, wow, awesome. Now I'm really excited I got in. So I saw a news story on ABC News, as you can see here. The gentleman in Orlando, I'll just read it. One man in Orlando, Florida, hasn't just got lady luck. He has her twin sister as well. James Bozeman Jr., 67, managed to hit the Florida Lotto not once but twice for a total of $13 million in winnings. Both times were at the same 7-Eleven in Edgewood, Florida. And the quote, "We're the only convenience store in the state of Florida that sold 2 winning lotto tickets since the inception of the Florida Lotto," said Jim Hamani, the store owner. So the lottery said today that Bozeman won $3 million on August 31st, which he chose to receive in annual payments of $100,000 over the next 30 years. When I saw that, I was like, oh, wait a second. That's a number that I'm familiar with. This says last year he beat the odds of 1 in 22.95 million. Let's call it 23 million rounded up, to win $10 million in the lottery, which he received as a one-time payment. Bozeman told the Florida Lotto that he used 2 different sets of numbers to win the 2 jackpots. He's working on his next set of numbers in hopes of winning again. So when I saw this, I thought, wow, good for him, number one. Number 2, wow, $100,000 a year. Wait a second, that's what we're showing people how to do with the Mastermind Group with the Financial Freedom Foundation. And but I looked at his odds, like 1 in 23 million. My goodness, that's a long shot. But then, I allow myself to dream, and I hope you guys do too. I thought, what would happen if, what would happen if he said, I already won 23 million, and here's the next winning ticket. I got the right numbers, and on his way to the lottery jackpot place to cash it in, I was thinking to myself, what if he would have offered that to me? What would I give for that? Knowing I had a winning lottery ticket in my hand for $100,000 over 30 years, what would that be worth to me? So I want to give you guys permission to dream too. I want to ask you, just imagine if James Bozeman offered you the winning lottery ticket. What would you be willing to pay? And I thought to myself, I don't know. Would I pay $5,000? Well, of course. $10,000? Of course. Would I pay $100,000? Well, to make $100,000 a year for 30 years? Yeah, it's worth $100,000, definitely. Would I pay $500,000? Yeah, I would. My goodness, of course I would. what I pay, if you approach it like a financial nerd and do a net present value, you'll calculate that the net present value of $3 million spread out over 30 years, depending on discount rate, is worth about $2 million. So I thought, okay, well, yeah, that's pretty awesome. That's what I'd be willing to pay, is up to $2 million, because that's the net present value, depending on your discount rate. So now, with that said, I want to take that $100,000 of passive annual income and share with you an experience I had. I took my family on vacation, and we went in the middle of the week when no one was at the resort. We went down to Baja California. It was a nice big resort there, and there was nobody there. Not a soul. We had one other person on the beach with us. We had one other person in the pool. And then the weekend came, and everybody started coming, and we left because it started getting noisy and started getting crowded. And when I came back, I thought, you know, this is interesting. I made more money while on vacation than a person earning a six-figure salary working full-time would have made working full-time during those same days. So when you make $50 an hour, that's just $100,000 passive annual income if you assume, you know, people work 50 weeks out of the year, 40-hour work week. That's 2,000 hours. It's an average of $50 an hour. It's like being on permanent vacation. I made more money while on vacation than I spent on the vacation itself. I thought that was kind of weird. The vacation paid for itself in essence. It's like a permanent vacation. And that's what I hope that you feel you deserve, a permanent vacation, because you do. If you are in the arena where you're working a job, you have permission to change that. Well, if only you had the knowledge, if only you had a winning lottery ticket, so to speak. And there's people that just spend so much money on the lotto. I never pay the lotto. I don't believe in odds like that. I like to control my odds, and I don't like 1 in 23 million against me. That's no fun. But making $100,000 a year in passive annual income is like having a permanent vacation, making $50 an hour while on permanent vacation. And that frees up your time and your energy to do lots of other very, very important things in this life, more so than clocking in at work. So now my colleagues say getting into Wharton is like winning the lottery. And here's why. What I'm going to share with you, I'm going to back up just a little bit, is that by showing you how to create your own passive income of $100,000 a year, I'm handing you a winning lottery ticket that you control. What I got from Wharton, I'm giving to you. This is from the Financial Times, FT.com. It's from the UK. It's a business journal, and they rank all of the global MBA programs. So this is a 2007 ranking. The reason why we chose that is because that was the year that I graduated. And so 2007, 2006, 2005. It's a 3-year ranking. You'll notice that the very first one, University of Pennsylvania, Wharton, is the #1 in the global MBA rankings. So that's #1 business school in the entire world. Those 3 years. Is it today? I don't know. But I don't care because I didn't graduate today. I graduated back in 2007, so that's the numbers that I care about. It's ranked higher than Columbia, higher than Stanford, higher than Harvard, and higher than London Business School. So was it a rigorous program? You betcha it was. Was it hard to get into? Yes, it was. But was it worth it? Every penny. It was a winning lottery ticket. Why? Because it gave me specialized knowledge. So I had a background in private equity and continued a little bit afterwards as well. So I have 10 years experience in private equity. I did about $250,000 out of my own pocket in what we'll call research. You might call that School of Hard Knocks, or fees I had to pay to gain access to certain knowledge as well as a Wharton MBA. That's what it took for me to put together my own winning lottery ticket that I control. All right. Now the beauty about this is that this ticket can be replicated. So James Bozeman, he'd have to give you his ticket and he'd lose out if he sold you his. I can replicate these lottery tickets. And that's what we're doing right now. I'm going to show you how you can have in your hands this winning lottery ticket. The knowledge that I distilled from the background and the School of Hard Knocks tuition, as well as the Wharton background, in applying this knowledge so you can create your own lottery type winnings, $100,000 a year for however long you want, or more. That's just the beginning. That's just a mental baseline that people have. So it all boils down to this: specialized knowledge applied in precisely the right way. That is how you yield massive results. Your current status in life is a collection of the choices that you made up to this point. Where you live, how much you earn. The difference between poverty and wealth is choice. It's all about having access to knowledge and taking action on that. That's it. That's how you create your destiny. Once I realized that, I paid whatever I could pay to gain access to knowledge, and I took action. And hopefully you do too. Now, how to turn that $100,000 into passive annual income of $1 million a year within 5 years. Now we're getting somewhere. $100,000 is nice, but $1 million a year is nicer. So is there a way to do that? How can we turn $100,000 a year into $1 million a year in passive annual income? And I can hear you just now saying, yeah, that's what I'm talking about. That's winning the lottery right there. Well, guess what? You have control over this. So here's how you control it. When money works for you, you don't have to work for money. Let me just preface this. There's no products to sell. There's no websites to maintain. There's no customer service to provide. No, there's no semblance of a job, okay? Money does the work for you if you do it right. So how do you do this? Yeah, simply kick compounding returns into high gear by reinvesting your profits for a couple of years. In other words, you do nothing. That's it. You do nothing. You just let the money sit there and keep on compounding. You just don't take it out of the accounts, and it just keeps growing because you have other traders doing the trading for you. You don't do the trading yourself. So let's look at the math. If you have, now again, we're not taking out we're not just looking at the increase. We're looking at the total amount. So therefore, we don't have the -1 anymore. So if you start with $100,000 and it doubles over the course of a year, you end up with $200,000 at the end of the year. Second year, you give it $200,000, you got $400K at the end of the year. Third year, you end up with $800,000 by the end of the year. By the end of the fourth year, so I said within 5 to 10 years, this is within 5 years, your $100,000 has grown to $1.6 million. So now we start taking the profits out only. We keep that as our new nest egg in the account. Well, the 1.6 million times 1.01, basically 1.06 to the 12th power minus 1 equals $1,619,514 passive income per year. That really is lottery type winnings. But guess what? You control it. There's no odds working against you. No, you control this. It's knowledge and application of knowledge. That's where it's at. Okay. So how do you turn the 100K passive income into $100K into $1 million passive annual income within 5 to 10 years? You do nothing. You just let it compound, and then you start taking profits out. So now, why would I share this with you? Why would I just hand you a winning lottery ticket? Well, I'll tell you why. This is one of our philanthropic endeavors. This is one of our ways of giving back. The Financial Freedom Foundation and the mastermind group that we formed is one of our humanitarian projects. So now we invite you to join our mastermind group of millionaires. Now I'm going to preface this. You don't have to be a millionaire to start. You're going to end up being a millionaire, right? Because you have the knowledge for it. But you don't have to start out that way. You just have to have, again, desire and take action, right? You have to have the knowledge and then take action on it. But join a mastermind group of millionaires who are willing to dedicate their time and their talents and their resources to what I broadly call helping others or lifting up others. We can be more specific, categorize it: feeding the hungry, clothing the naked, liberating the captive, and administering relief to the sick and afflicted. Those are 4 big categories. In doing this, you'll see that in incubating, sometimes people call this social philanthropy. Others, you can call it social entrepreneurship, because I like the humanitarian projects to become self-funding over time and create more value than they consume. So as opposed to the general philanthropic model where you give something away and it's gone, I like to be accretive. I like for compounding to always occur. And that way you're creating abundance and not scarcity. And in our mastermind group, we actually show you how to incubate a $100 million project, humanitarian project, or bigger. You can, I'm happy to go much bigger. And you know, if you had unlimited time and you could access other people's talents and resources because of the financing that you had available, what would you do with that? What kind of passion would you pursue? Beyond your own lifestyle, there's a lot more than just going on vacation all the time. It gets boring after a while, actually. So it's about building up others. That's where true meaning is in life. When you look back, it's a legacy you left when you're on your deathbed. This is the kind of stuff that counts. The quality of relationships with your family and how you impact the society around you. And that's where it counts. And if it's just something local, that's great. If it's something, if it's, you know, $100 million project, that's even better. But you don't have to do that. But the beauty is when you create a $100 million project, you own those assets free and clear. You just printed $100 million of money for yourself. It's basically what you do every time you incubate a project. So the core question I'm going to ask you right now, though, is does this purpose resonate with you? There are people whose only focus is me, 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 me. It's themselves. That's nice. You can go somewhere else. If your intent is let's take care of your first stewardship, which is your family, and then let's really start living and start figuring out how to change society around us for the better, well then let's keep going, right? So who are we? We touched on this, but you know, really, who are we? Can we verify it? So again, my qualifications, I have an MBA from the Wharton School. Sometimes they call it the Wharton School of Finance because a large majority of Wall Street are Wharton School graduates. About 40% is what I heard last time, last statistic. A master's MA from the Lauder Institute of Management and International Studies. I'm a member of American Mensa, which is the Genius Society, and a member of NISA, the National Eagle Scout Association. And yes, I am an Eagle Scout. You know, it took a lot of work to get it too at that age. And I was a Scoutmaster for a long time as well, helping others achieve that. And not everybody did achieve Eagle Scout, and not everybody needs to. But I do have, as part of my core values, what they call the Scout prompts, the Scout law. The Scout is trustworthy, loyal, helpful, friendly, courteous, kind, obedient, cheerful, thrifty, brave, clean, and reverent. I hold to those values. That's who I am, right? Now, part of my professional background is all focused on non-traditional investments. Private equity, started that in 2007, started trading stock options in 2001, and I would do that in the morning before going to work. In my private equity experience, we started getting into oil and gas deals in 2002, so I got a lot of exposure in the oil and gas arena. Started currency trading in 2003. Now I trade from, that moved a lot faster than stock options, so I preferred currencies over stock options. And I would trade from 5 a.m. to 8 a.m. I was never afraid to work hard. I had a paper route while I was growing up. I had to wake up at 4:30 in the morning every day in high school. Man, that was killer. But so I just trade currencies from 5 a.m. to 8 a.m. I would make more money trading currencies for 3 hours than I would the whole day at work in private equity. And so when I got into the Wharton School in 2005, I thought, you know, I'm going to incubate a hedge fund, a currency trading hedge fund. That's why I went in with that intent. But then I saw the light. Why would I be in front of a screen making trades all day long? I'm not an investor. I'm an employee. I'm self-employed if I do that. So I got out of it. I changed my mind and decided to have traders work for me so that I could just focus on risk management and have them do the actual grunt work. And then I got into real estate private equity in 2007 once I left business school. And but I got out of real estate private equity once the markets tanked, and I realized all the risks there are with commercial real estate. And there's no need to take on those risks if you can manage them using other structures. So now some people say, well, how do we know that you're telling the truth? How did you actually graduate from Wharton? Well, here's, in the terms of due diligence, here's a screenshot from the Wharton Alumni Directory, University of Pennsylvania. That's me, Rob Thompson. WG, Wharton graduate 07. G07 means the Lauder Institute. And founder of Financial Freedom Foundation, our email address, our phone number, it's all on our website. MBA, 2007 from Wharton, and then this is the Lauder Institute Masters of Arts, 2007 as well. How do we know if he's really in American Mensa? There's Mensa, American Mensa, the Genius Society, and there I am. And there's my name right there, Rob Thompson. And of course I'm logged in, that's why it says log out after that's my profile. Okay, so how do we know if the Financial Freedom Foundation itself is legit? Well, here you go. Here's a Texas Secretary of State. It's a domestic nonprofit. It's in existence. It was started back in 2010. There you go. There's our address. All right. Hopefully that answers people's due diligence questions. Now, for further proof that we are who we say we are, this is from Dun & Bradstreet, the credibility company. They're the behemoth of business credibility. And this is their credibility review. If a company's credible, they're the ones that will tell you. And here's our logo, the Financial Freedom Foundation. There's our name, our address. There you go. When we were founded, as you saw, incorporated in Texas. So this is a second data point as a way to verify that we are who we say we are and that everything is legitimate and above board and reputable. So now in terms of implementing knowledge, it's about knowledge and its application. I had an experience where a friend of mine, her grandfather was a multimillionaire, and her grandmother, after 40 plus years of marriage, divorced him. I don't know what happened, but yeah, and he was devastated by it, and he just let her take everything. He said, "Doesn't matter to me. Money doesn't matter. I can make it back." And I said to my friend, I said, "Well, he's so old. He can't get a job again." This was way before I knew about investing. I said, how is he going to make his money? Because I only thought a job was how you made money. That's how I was raised. A job equals money, money equals a job. So, but she told me, she said he's already halfway made it back. And I learned that if you take a millionaire's money away, they'll become a millionaire again within a few short years. Why? Because they have the knowledge and they know what actions to take, how to implement the knowledge. And if they were to tell an average person, one of these job equals income people like I was, their strategy and expected results, the average person would simply reply, "It sounds too good to be true." Yeah, you go ahead and try that and fail. It's too good to be true. I'm going to just stick with my job, right? Me, however, I was like, how did he do it? Tell me. I want to talk to your grandfather. So I was always curious, which is why I ended up where I am. So, but what I learned is that 2% of the adults in the world, they own 50% of the wealth, because that 2%, they know something that the other 98% don't know. And they take action on that knowledge. It's all about knowledge and action. I can't drill this carefully enough. This is so important. It's so empowering to know that we have choice. We have control over our own destiny. Life doesn't happen to us. It does. But we can control how it affects us by our choices and our actions. So again, specialized knowledge applied in precisely the right way yields massive results. Now we just skimmed the surface. Now we're going to go deep. Okay? We're going to pick up the pace a little bit because we have about 2 hours of content to cover. We only have about 1 hour to do all this. We're going to try to keep it to about 1.5 hours. Okay? So diving in. What is passive income? And what is financial independence? You know, one of these esoteric questions. Robert Kiyosaki, he defines it pretty well. Rich Dad, Poor Dad fame. I like some of the stuff he teaches. I don't like his programs because he encouraged seminar junkies where people just go to seminar fests and end up going broke, paying for money for programs that he's just reselling from other vendors. I don't like that. But he does have some good content. And one teaching thing that he has is this Cash Flow 101 game. I played it with my daughter. I play it with high school kids. I play it with, I use that as a instruction mechanism. In that game, it cements in the mind, net worth is worthless. It doesn't matter how much money you have. What matters is how much money you have coming in. That's what counts. You exit the rat race when your monthly passive income is larger than your monthly expenses. Period. That's it. So as long as your passive income is greater than your expenses, you're financially independent. Another way to say that is independently wealthy. Okay, same thing. That's financial freedom. Financial Freedom Foundation shows you how to do this. Okay, so how do we do that? Levers of wealth creation are massive capital and return on investment. So how do you get your massive capital built up? First, there's two sources. You learn this in business school. You either do equity financing or debt. Those are your two choices. That's it. Or it's some kind of a hybrid between the two. Equity, you have personal savings, personal equity in a company, they call it retained earnings, or you have investor equity, outside investors. Notice that's in red. It's in red because it's bad. Never accept equity from outside investors. Okay? Let me say that again. Never accept equity from outside investors. Why? Because now this is kind of counterintuitive because this is coming from somebody with a private equity background. But I was always a person asking for equity, never giving away equity. Right? That's why I was on that side of the equation. Why? Because when you give equity away, you give away control. J.D. Rockefeller said, own nothing, control everything. You want to retain control. When you accept equity from some outside person, they own you. And if you make them 10 times their money, they say, thank you, give me more. Then never leave your pocket, right? Don't do investor equity. Plus, you put yourself on the playing field of the Securities Exchange Commission, the SEC. And their only job is to make life miserable for people who ask for equity from investors. Don't step onto their playing field. You don't have to. The other option is debt. So how can you build up your massive capital? You have consumer debt and investment debt. Consumer debt is in red. Why? Because that's bad. When you get credit cards and you purchase consumables, in the Cash Flow 101 game they call them doodads, when you purchase things that don't create income, you're consuming the debt. That's why they call it consumer debt. And then you pay interest forever after. Again, they got you by the noose. They got the noose around your neck. Don't do that. So you don't want consumer debt. Now, it's good to have personal credit cards. It's very good to have personal credit cards, and it's good to have them paid down to zero. Except for half of them, you want to have between 8 and 11% credit usage ratio, because then you look like you don't need the bank's money, but you're still teasing them along and saying, hey, I'll use a little bit of your money if you just give it to me, right? So consumer credit cards are good if you don't have a balance on them, but consumer debt's bad. Investment debt is a whole different world, and I did not know that investment debt existed when I was growing up. I was always taught debt's bad, don't get into debt, stay out of debt. They preached it until I learned in Finance 602, is where I learned this one at the Wharton School, that debt's cheaper than equity. I thought, wow, wait a second, debt's cheaper than equity. I want debt, I don't want equity. So you go for investment debt. There's two forms. It's called business debt. It does not show up on your personal credit profile. It comes in the form of credit cards or lines of credit, cash, checkbook lines of credit, or term loans. It doesn't matter. But you have two different classes of it. Personally guaranteed, we'll call it PG for short, or non-personally guaranteed, non-PG. What this means is you act as a co-signer for the company so that you can get funding from the banks. It's a regular credit card. Non-PG, you don't act as a co-signer. The company has enough credit profile on its own, or you get somebody else to act as a co-signer. Okay, so let's talk about PG funding first. Let's dive deep on that one. With PG funding, personally guaranteed business funding, this is great if you're in the U.S., United States of America. If you're not in the U.S., you don't have a credit profile, there is a way to access this. We're going to get to that next, okay? But first, if you have a FICO score for Fair Company, your credit score of 700 plus, you need a credit usage ratio below 35%. What that means is if you have $10,000 of total credit limit, on all your cards, revolving credit lines combined, credit cards or store cards combined, and you're only using $3,500, then you're using 35% of 10,000. So that's to be below that number. No derogatories, no late payments, no charge-offs, no tax liens, no public records, no derogatories. If you meet those simple criterion, then the funding group, we have different companies we go to do this process for you, because you don't need to master this process. They are the masters of the process. They're doing it for years. Thousands of companies have taken through this process. The funding group creates the business entity for you, but you act as the co-signer. So funding amount is based on your personal credit score. How much does it cost? As much as a zero up front, zero down, or maybe there's a different one where it charges $2,500 upfront fee. If you pay the fee up front, you don't pay any fee on the back end. If you don't pay any fee up front, you have as high as a 12% back end fee. Right? The target amount is $50,000 to $150,000 in investment debt at 0% interest to prime plus 2. That's the interest rates you pay. First batch of funding in about 30 days. Okay. Next, we're going to go over non-PG funding, non-personal guarantee. This is great if you're in the U.S. and for internationals if you're not in the U.S. Does it work if you're in Canada? Yes. Does it work if you're in Australia, New Zealand, Norway, Mexico? How many other countries can I list of people that are mastermind group? Yes, yes, yes. Yes, anywhere in the world it works, okay? No, except if you're in North Korea. They don't take you if you're in North Korea. But everywhere else that works. So there's no personal credit score needed. You set up a new corp or use an existing corp. Actually, Russia's on the blacklist too. If you're from Russia, they won't let you do this. I'm sorry. But you do non-personal. There's no personal credit score needed. You set up a new corp or use an existing corp. You build its credit profile. The company itself, kind of like you had to build up your personal credit profile in whatever country you live in. For businesses in the U.S., the business credit bureaus are DNB, it stands for Dun and Bradstreet, DNB. Experian Business or Equifax has a small business financial exchange, SBFE. The corporation alone guarantees the funding. Now the cost is $795 upfront to $1795 upfront fee, 0% back-end fee, or as high as 15% back-end fee, depending on which of the different service providers that we use that you decide to go with. And you can use more than one, of course. The target funding amount is $50,000 to $500,000 in investment debt at prime plus 2 or thereabouts, with the first batch of funding occurring in about 120 to 180 days. Why does it take longer? Why isn't it just 30 days like before? Well, because you've got to build the company's credit profile. It takes time to do that. That's why. Is there a way to combine the best of both worlds? Actually, there is. It's called Credit Partner PG. It is non-PG to you. Okay, this is great if you're in the U.S. and if you're not in the U.S., internationals. So there's no personal credit score needed from you. You set up a new corporation or use an existing company. The credit partner acts as the co-signer, not you. We'll show you how to find a credit partner. That's part of when you're in the mastermind group. We show you exactly how to do that. It greatly accelerates the funding process, and you can do multiple corporations with multiple co-signers. Okay, so you can scale this up. What's the cost? $795 upfront to $2,500 upfront, 0% back-end fee, up to 12% back-end fee. The target is $50,000 to $150,000 in investment debt per company at 0% interest to prime plus 2. Prime right now is really low, so your total interest rate, and it's going to fluctuate over time. So you're even prime plus 2 is maybe 5%. If you get if we have an increase in interest rates, it might go to 7%. Right? Still very, very affordable. The first batch of funding is in 30 days. Ooh, look at this. So you can do multiple companies. Your credit profile is not needed, and it only takes 30 days to take a company with a credit signer or co-signer through this process. That's really where it's at. So, testimonials. How do you know if people really get PG funding. How do you know that what I'm saying is real? Well, here's how you know. You see testimonials, you see people who've actually done it. So these are actual business lines of credit that clients have received. This is from one of the business funding processors that we use. They get business lines of credit from Bank of America, Fifth Third, Chase, Comerica, Huntington Bank, Bank Atlantic, Barclays. So let's just look at some of the people who have actually gotten funding using them. This is PG funding and Credit Partner PG funding. So this first one right there in the yellow, it's $74,000 in the first week. Now they're up to $116,000. This one, $100,000. This one, $233,000. And in yellow, it's covered a little bit. 0% APR credit, right? That's 0% interest rate for the first 6 to 18 months. This one, $100,000. This one, $28,000 and 0% credit cards. You would wonder why only $28,000 when everyone's getting so much higher. Likely this person has a high credit usage ratio, and that's all that the bank's willing to lend them. If you pay down the credit usage ratio, boom, you're golden. The lower it is, the more you get. They could have gotten a credit partner to further boost their funding, and hopefully they are looking to go that route. But this one is $266,000, again, of 0% business credit. You can see right there. This one, $42,000, 0% business credit, 0% interest rate. Again, why is it so low? Probably because they had a high credit usage ratio. This one's $68,000 and 0% interest in 45 days. This one initially was $120K at 0% interest in less than 4 weeks. Then a total of $224,000. All right, that's pretty good. This one was $109,000, 0% interest in the first 2 months, so it's first 60 days, and the total is $330,000 of business funding. So does PG funding work? Yes. Now, is there any way to even further accelerate building up the massive capital? Yes, active income. Again, this is great for if you're in the U.S. or if you're international. So we call it infopreneuring, online business. The core mainstay of that is affiliate marketing, membership sites, and product launches. This is just an option that we give to people in our mastermind group. Why? It's training, it's specialized knowledge, but this really is a hyper-efficient communication, and a lot of times it makes sense to incorporate internet marketing type communication in a humanitarian project, right? Matter of fact, we have people in our mastermind group who already make $80,000 to $100,000 a month from internet marketing. That's net. That's without any of the trading going on. And that sets the stage for your first humanitarian project. You can set up multiple companies to use with your credit partner, PG, which is non-PG to you, and have your companies under doing your internet marketing for you. Or better said, you do your internet marketing under the name of the companies you form, and it works synergistically with the funding process, okay? It costs $0 to $500 to get it off the ground. There is a very simple, now the internet marketing that I show people how to do is just the basic core of any good, strong internet or online business. Affiliate marketing, membership sites, and product launches. The mindset of, oh, I don't have any money, therefore I'm going to be poor forever, doesn't count, doesn't work that way. It's not about do you have money, it's about do you have knowledge, and do you take action on the knowledge. And so I want to just drill it down to the point where you can either use other people's money by using PG or non-PG funding, or you can use your own effort, leveraging the speed of light technology of the internet to get hyper-efficient communication. Marketing is the lifeblood of any business, and once you master that, man, it really changes things for you. So, and then with when you take the company that you do the internet marketing under through the funding process, you can use that for getting even additional amounts of non-PG funding, because now you have cash flow in the business. So that's just how it works synergistically with the other components, okay? So knowing how to access non-PG funding and credit partner PG funding is like having the keys to the treasure vault. Literally. You just walk in there and you say, hey, there's some gold. Thanks. Give me some gold. It's called fractional reserve lending. And basically it's the protocol to induce them to print money for you. That's it. Banks make money by giving loans. If you qualify for the loan because you meet the protocol, then they give you the money. That's how it works. We live in a world of fiat currency, and it gets created by a computer at the Federal Reserve. This is what it looks like. So it's a function of how many companies you have and how many credit partners you have. So how many companies can an individual own? That's a fair question. However many you want. That's the answer. You can do multiple non-PG companies and credit partner PG companies simultaneously. What would that look like? If you do 5 and you get $50,000 each, that's $250,000. If you do 10 and you make $50,000 each, that's $500,000 of capital to work with. All right, let's do 20. If you do 20, you get $50,000. That's $1 million of capital to work with. Now, if you make 6% per month income on 250 grand, that's $15,000 a month passive income. If you make 6% per month on 500,000, that's $30,000 a month. 6% per month on $1 million is $60,000 a month passive income. Did we show you how to win the lottery? Yeah, this is a winning lottery ticket right here. So let's drill down on the return on investment component. So, with return on investment, you have earnings minus expenses is your net income or cash flow, one and the same, okay, for these purposes, right? So your return on investment minus your cost of capital equals your passive income. That's the language we're using right now, okay? What does that look like in terms of dollars? 6% per month return minus 1% interest plus principal. Because when you're using other people's money, and if it's a bank, you have to repay the loan. If it's a credit card or a checkbook line of credit or a term loan, what's your monthly payment? Usually it's about 1 to 2% per month. Okay? So that equals 5% monthly income. That's your cushion, right? That's your arbitrage spread on money, okay? So let's put some dollar signs behind it to make it easier to understand. $600, if you have $10,000 massive capital, that's $600 a month trading profit minus $100 a month cost of capital. That's how much you have to pay your interest payments, your principal payments, your minimum payments on to the banks. That leaves you $500 a month. Whoop-de-doo, right? $500 a month, great. Now, in some countries, wow, you're middle class, but most people, they're like, yeah, $500 a month. It doesn't, I can make more than that with a little can on the side of the road being homeless, right? So let's go up his $10,000 a month. Okay, now we're getting somewhere. That's $6,000 a month trading profit minus $1,000 a month cost of capital. That's $5,000 a month income. Well, you just went from being homeless to being a job in the employee quadrant of earning income. That's where you come from. But this is how you get out of there. Boom. You just graduated. You're out. You have enough passive income to cover your living expenses. For some people, not everybody. But now we're getting somewhere. Okay. What if you have $1 million massive capital? That's $50,000 a month of passive income. If that doesn't get you out of the rat race, something's wrong with you, I got to say. Right? Hopefully it gets everybody out of the rat race. $50,000 a month, my goodness, that's way more than most people need. What do you do with $50,000 a month? It's hard to spend. I was spending more I was earning more while on vacation than when I was on vacation, and we were staying at really nice places and eating at nice restaurants. So what do you do? Do we eat out every day to spend more than $10,000 a month? What do you do? That's a lot of money right there. What do? Is once you take care of your stewardship of your own family, then you look outside of yourself. You reach out to help others around you. Lift up society around you, and that's how you make society better. It's how you change the world. It's individuals like you and me working together, working smart, and it just takes a few committed people to make a dramatic difference. Okay, that's what we're doing this. So let's summarize the wealth creation vehicles. We went over it conceptually, and let's go a little bit more detail. So you have, in the terms of wealth creation vehicles, you have the categories of equity appreciation, where you get rich. Okay, your goal is to build equity. You can convert that to passive income later. You use that using managed accounts, growth stocks. People know about growth stocks. Play the stock market, IPOs, buy Google, buy Yahoo stock, buy Apple. Owner's equity, buy Microsoft stock. Owner's equity in Microsoft is probably an income stock by now, but owner's equity in a business. Also, single-family residential. That's this is one of these retail investment strategies that's constantly sold to the general public. Let me just tell you, all this stuff, growth stock, single-family, it doesn't really make you a whole lot of money. Matter of fact, single-family residential usually ends up with negative cash flow when you take into account the repairs you need to save up money for that inevitably occur. And then owner's equity in a business. People have control over that, but not everybody can hire tons of employees and have a huge business running successfully. It takes a special skill set. Active income over here, that's your job. You work in someone else's business, right? Or you're flipping houses, you're doing foreclosures, short sales, wholesaling, rehabbing, lease options. Those are the big strategies that constantly get pushed on the retail public. Why? Because they make more money selling the strategy than they do doing the strategy. And this is what they sell at the investment seminars. Internet marketing is under active income. 99% of internet marketing, unfortunately, doesn't work. It's tactics that are outdated. That's why they started selling them to you, because they can't do it themselves anymore and make enough money. So they make more money by selling it. But the strategies that we teach people are evergreen strategies that will always work. MLM, network marketing. People say, that's passive income, except I have to go to all these meetings all the time and be on these conference calls and have to recruit people and buy product. And if you can't walk away for a year and have more money coming in than when you left, that's not passive income. If your money decreases because you walked away from it, then it really is active income. So MLM is active income. Now these are okay. You can use these to fund your other columns, but the key column to focus on is your passive income, managed accounts. Oh, notice that comes up a second time. Income stocks. Those are your blue chip stocks, bonds. Those pay dividends. And sometimes you can get a good dividend, 9% per year, but really 9% per year, whoop-de-doo. Inflation's about 9% per year, depending on how you look at it. Bonds, even worse. They pay a coupon, but even junk bonds don't pay enough to really keep up what the real inflation rate is. Commercial real estate. Self-storage real estate, billboards, mortgage notes, private lending, private money, hard money lending, oil wells, all these in that passive income category. And I'll tell you this, I've been there and done that, and the best, absolute best one to focus on is the one I put in bold, and I'm going to put a circle around it for you, is managed accounts. And here's why. And this is how you create passive income. That's how you get financially independent. Have more income than your living expenses. Okay, managed accounts. This is what you want to focus on. This allows you the greatest amount of control and transparency. How does it work, though? People are not familiar with managed accounts usually. So you are in control. You're the client. You make a deposit with a brokerage firm. They have a trading desk at the brokerage firm. Only you can make withdrawals. So this is where the custodian of your money is located. Okay, the trader of your money is over here on the side. You give the brokerage firm instruction to let the trader trade or place trades on your account until you change your mind. So you retain control. You get to see every single trade the trader places. Can the trader fake the returns like Madoff did? No, they cannot. There's no Ponzi scheme possible here. Why? Because it's a brokerage firm reporting the results of the trades, not the trader. So they keep it honest. And they're the ones who have the money, not the trader. Right? So there's no Ponzi scheme possible. Okay? So who are some of the brokerage firms? Thinkorswim, Global Futures, Forex.com, Deutsche Bank. The professional traders, you give a letter of direction or a limited power of attorney. And again, they send the trade recommendations or they trade your account as part of a block of accounts, okay? Called a PAM account or MAM account if you want to get technical. And the client, you use a brokerage firm's website to watch the trades as they occur. You monitor the results in real time. At first, people like to watch it. After a while, it gets boring, and you don't check it except for once a month, and then you get lazy like me, and you don't check it except for once a quarter, or maybe if you're lucky, once a year. Okay, this is truly passive. It takes effort to set it up, but once you got it set up, boom, you're done. Okay, now, what kind of traders do you use? Important thing to ask, right? There are 3 market cycles. Okay, you have your traditional buy and hold is very risky, so don't do buy and hold. Buy and hold only works in a bull market. You do growth stock or income stock is buy and hold, and that works great in a bull market, but it incurs massive losses in a bear market that goes down or a challenging market that goes sideways. Okay, so never do buy and hold. You want to do active, multi-directional trading, because that can make money in all 3 market cycles. If something is guaranteed, and if I were to tell you, hey, here's a strategy that's guaranteed to lose you money in 2 out of 3 market cycles, would you say that's a good investment? Hopefully you're in your head, you're saying no, because it's not a good investment. If it's guaranteed to lose money in 2 out of 3 business cycles, don't do that. Make money in all 3. Do absolute return on investing, okay? Now, managed accounts, as I said before, are the best, the absolute best passive wealth creation vehicles, even better than internet marketing, better than buy and hold stocks, better than real estate, hard money lending, insurance accounts, oil wells, private equity funds, hedge funds. They have something, insurance account that they call infinite banking or private banking, personal banking, the bank of you. Garbage. Garbage, complete garbage. The insurance company's making all the money, not you. In this case, with a managed account, you make all the money, not them. Managed accounts allow for 100% passive income generation. Managed accounts provide scalability, transparency, so you can add more money and get the same return on the new money as you are on the existing funds. You can't do that with real estate. If you have a great real estate property that's making a good return, you cannot put an extra $10,000 in it and expect to get the same kind of return as the initial money. You can't do that. Transparency. With a hedge fund, you have no clue what they're doing until they tell you, and then you don't know if they're telling you the truth. Liquidity. You have what's called a redemption period with hedge funds, or with real estate. You just can't take your money out. You've got to refinance, and if the banks aren't lending, your money's locked in. And if the real estate is going down in value, you just watch it burn. It happened in 2008. Countless individuals, millions of very savvy investors, not because people are stupid, very savvy, smart money investors lost trillions of dollars actually in 2008, and entire banks went under, okay, because there was no liquidity in real estate, period. That's why. Managed accounts, complete liquidity. You want your money out, you send them an email or make a phone call to your broker, and they say, where do you want us to send it and how much do you want? They'll be there within 24 to 48 hours. You have control. You can hire or fire the traders at will. You can actually step in and say, I want to close this trade early. You have complete control. You minimize liability. Unlike real estate, no one can slip and fall on your stairs and sue you. Unlike oil wells, there's no chance of a spill with environmental damage. And you minimize risk, because you can manage risk extremely well using managed accounts. We're going to cover that in a lot more detail later. So your basic strategies, we said that there are 2 columns. Your income column, there's an income strategy. This is a passive income strategy. Then you have the wealth creation of the growing your base of capital strategy. So if you need income now, you have your managed account right there. You take your trading profits, cha-ching, out of the account whenever you want at the end of the month, and that becomes your passive income. And I would suggest you use a personal money management system, which we will send to you, and that's how you manage your money. Okay, so you always want to budget how you live and live on your budget. That way you are in control of money. Never let money control you. The wealth creation strategy is very similar. Well, you have your managed account, trading profits, and instead of taking it out, you just let it sit there. And that's how you grow your massive capital. And before, if you start with 100,000, as we saw earlier, if you just let it compound, you'll end up with about $1.6 million if you're making an average of 6% per month over the course of 4 or 5 years. Okay, that's how you get the compounding effect of returns. Okay, so we saw testimonials on the massive capital side. It's a little bit more difficult on the return on investment side because the Securities and Exchange Commission has very strict rules about what we're allowed to do and say, because we're not investment advisors. We never give any investment advice. Okay, so we were able to get one of our members to share this much. He basically said, F3 has been of tremendous value to me in turning around my financial situation by following the simple strategies. They recommended they not being F3, but the traders that were on our Rolodex that he's using in the commodity futures. The portfolio has already grown by 40%. And he wasn't, this was only just a couple months to be able to get the kind of performance, those kind of returns. He says, I really appreciate the friendly and personal approach. If you need more than this, then how do you get it? Well, it's in the Rolodex, and that's after you join the mastermind group. We have a 60-day money-back guarantee. Our payment processor is PayPal, and they themselves will enforce a guarantee. It's ironclad, okay? So what you do is you join the mastermind group. You get access to the Rolodex of traders. You contact the introducing brokers. They put you in touch with the direct traders, and the traders, they're the only ones authorized by the SEC, the Securities and Exchange Commission, to advertise track record. Okay, it's verified, audited track record. That's what they're showing you. And again, you have 60 days. You can contact every single one of them if you want. Plenty of time. So this particular component you'll have nailed down with absolute certainty. Does this work? Yes, it does. On the risk management side, this is also in the category of return on investment. The key is, how do you get a consistent return on investment, consistent 6% per month? Because any single trader is going to be bouncing around from one month to the next, right? So it's risk management. That's a key to a high consistent ROI. You have different categories of risk: strategy risk, key man risk, specific risk, market risk, which is also called systematic risk, risk of fraud, which is Ponzi scheme risk, Madoff risk, financial institution risk, political risk, and currency risk, which is also called inflation risk. I do not expect you to master these. I had to. But it took me 10 years, again, and $250,000 in a Wharton MBA to be able to master these, as well as all the trading I was doing along the way. The nice part is this. We have a Rolodex of these traders. It's designed such that you automatically control for strategy risk, key man risk, specific risk, market risk, Ponzi scheme risk, political risk, and currency risk. It's built into the system. The process is 99% automated, as all the heavy lifting has already been done for you. Okay. It is a bear to figure out how to manage for all of those, but once you figure it out, it's really simple. Okay. So when you have a portfolio built out with 10 to 15 managed accounts with active multi-directional traders, what you end up with is something that is less risky than anything that any certified financial planner, registered investment advisor, chartered financial analyst, or private wealth manager has a capacity to do for you. They cannot do this. And the reason why they cannot is they're beholden to certain product lines, certain companies they're allowed to represent, certain currencies allowed to transact in, certain markets they're licensed with. They just can't do this because they have their hands tied. Only you can do this for yourself once you know how. We cannot do it for you. Only you can do this for yourself once you know how. So that's why we give you knowledge, and you have to take the action, apply the knowledge correctly. Okay? So we've simplified it as much as possible. First, your goals, you determine. Now, goal setting is very intimidating to a lot of people. It is to me. Every end of December, I'm like, oh man, I got to set my goals for next year. But here's the simplest way to do it. Determine how much passive income you need to cover your living expenses. If your living expenses, if you spend $5,000 a month right now, and you need $5,000 a month passive income, then you're financially independent. You're independently wealthy. That's for you. If it's $10,000 a month, it's $10,000 a month. It's pretty simple. Just look at your budget. And then you determine what would be the living expenses of your target lifestyle, and that's your next goal, to get that level of passive income. Pretty simple. Once you determine what you want to get, then how do you get there? You build up your massive capital. How do you do that? Using internet marketing, your savings, PG funding, non-PG funding, and credit partner PG. We covered those earlier. Next, you turn that cash into cash flow using the Rolodex of traders. You turn that into return on investment. That's 6% per month historical returns. That's what we screen for, a minimum performance of 6% per month historical returns. You have the professional traders generate the returns in your managed accounts. And that's how you convert cash into cash flow. Your money or other people's money into cash flow for you. And then that's where the real fun begins, step 4, the vision. You incubate humanitarian projects of your own choosing and your own initiative. Don't give money to other nonprofits. Usually they just flush it down the toilet. Not that they're not doing good things with it, but it's spent and is gone. It's usually a hand out. And a lot of philanthropy ends up causing more problems than it solves. It causes dependencies and ruins local economies. Instead, we train you and show you how to do social philanthropy or social entrepreneurship so that you're creating permanent solutions to problems. And the goal is to relieve social and economic distress. These are philanthropic endeavors, and that is so fun. That's where the real living is. That's where the legacy occurs, the legacy that you leave behind. So then it's up to you. You choose your vehicle. The average speed of bicycles, I like this analogy, the average speed of bicycles is 18 miles per hour. But you got to be huffing and puffing to do that. And unless you're one of these Tour de France cyclists, you can't do that for very far before you wear out. The average speed of rocket ships orbiting the Earth is 18,000 miles per hour. It takes effort to get up there, but once you're up there, boom, you turn the engines off, right? That's what you do. You just orbit. The difference is efficiency. You take out all the friction, all the things that slow you down. With the bicycle, you got the gears and the road causing friction. It's constantly slowing you down. If you feel you can never get ahead in life with your job, that's why. Because life's, all the systems working against you. What you want to do is put yourself on a different orbit. Get out of the employee quadrant, get into the investor quadrant, and then you just have the efficiencies working in favor for you. And that's what all the top 1%ers figured out. Get out of the employee quadrant, and let's stop having life slow us down. Let's accelerate things. Now, a little bit of more detail on the kind of background that I had to get on the due diligence of the traders in specific. I did it while at Wharton. I did an internship at Hamiltonian Advisors. They are a hedge fund of funds and a private equity fund of funds. They have $48 billion under management. And people would pay, I was on the due diligence team, people would pay our due diligence team $25,000 to perform due diligence on a hedge fund or a private equity fund. That's why I learned how to do due diligence. If you pay $25,000 on each of the 15 traders, which of course I'd had to diligence, right, for me to use them, which are the same traders that we have on the Rolodex, it would cost you $375,000 to replicate what just took me effort to do because of my specialized skill set. And so, again, develop that skill set. It took 10 years, $250,000, and get an MBA from the #1 business school in the world. So you can, I'd like you to be able to implement this knowledge I've given you. You can try to do it yourself, or you can use F3. View F3, our mastermind group, as a shortcut. That way you avoid losing money. You don't have to lose $250,000 in the School of Hard Knocks or paying specific tuitions to different institutions or courses to get the specialized knowledge. You don't have to do that. The trail's already been blazed. You avoid the pain and the suffering that I had to go through. Because that specialized knowledge, applied in precisely the right way, is how you yield massive results. Now, it could take $375,000 plus $250K, take $625,000 plus 10 years to replicate what we do, or you could let us help you get into orbit quickly. Okay, so the three options are a lifetime subject to mediocrity, and I'm not saying that anybody's mediocre. What I am saying is that if you live in the employee quadrant, ask yourself, would I continue doing what I'm doing if I didn't get paid for it? If I did not get paid for my job, would I stay at my job? If the answer is no, well, then there's something higher and more valuable for you to do. And compared to that higher and better use of your time and your talents, what you're doing now is mediocre because it's not the highest for you, right? You can do it yourself, which causes pain and suffering, or you can tap into the F3 brain trust and save time and money through this shortcut, the trail that's already been blazed for you. Going back to something that we mentioned earlier, just imagine if you were offered that winning lottery ticket. You have to ask yourself the question, what would it be worth to you? Because what we've done is we've offered you a winning lottery ticket here. Would it be worth $10,000, $100,000, $500,000, $1 million, $2 million? This is a legitimate question. The reason why is this. If you get $100,000 a year for 30 years, because of the time value of money, if you discount that to the present value, the dollar today is worth more than the dollar tomorrow because of inflation, right? Depending on your discount rate, your net present value is going to be between $1 to $2 million. That's what that is worth. That's what this knowledge is worth. Matter of fact, it's worth a lot more than that because we show you how to create, how to incubate a $100 million humanitarian project that you own free and clear, right? That's really what this kind of knowledge is worth. But that's a little bit later on. You don't start there. You end up there, right? But what is this knowledge worth? It's worth a lot. Now, there's a guy named Robert Allen who has an Enlightened Wealth Institute. They don't teach what we teach, not nearly what we teach, but he has an inner circle, mastermind group type situation, where he charges $25,000, and people pay it all day long. Robert Kiyosaki, he has an inner circle type situation. His highest level program is $60,000. Okay. Our mastermind group is only $9,997. It is 60% less expensive than Robert Allen's and 83% less expensive than Robert Kiyosaki's, but we provide way superior value, okay? Now, if you're going through financially tough times and $9,997 is currently out of your league, we created a step-up program just for you, where you can start at the silver level and then upgrade to gold later when you have the financial capacity. It is best to start at gold, but if that's not in your financial capacity, then start at silver for now. With our F3 Mastermind group, we've put together the exact resources you need and the instructions in how to apply them in precisely the right way so that you can generate the $100,000 in passive income. We provide step-by-step guidance to help you accomplish that. Now, the business funding groups are there, both the PERSA guaranteed and the non-PERSA guaranteed, as well as exact traders to use. We also provide a detailed training in internet marketing. We call it the IM Fast Start, so that you can leverage technology in order to initiate the beginning stages of a self-funding humanitarian project while generating an additional income stream. Now, we streamlined the internet marketing and figured out how to shorten the technology learning curve so that you can have maximum success in something that 90% of people fail at. Now, speaking of trading, the Rolodex has the contact info for the gatekeepers for you to get about 15 professional traders that get over 6% average monthly returns historically, which is about 72% return per year. They trade stocks, stock options, Forex, foreign currencies, commodity futures, and ETFs, which are exchange-traded funds. Now, this is just the baseline, the basic level. This is what we call level 1 investing. In the Rolodex, this is also where we have more in-depth training on the risk management strategies that we blazed through earlier. And that's how you create the high-return, low-risk portfolio. Now, is it possible? Absolutely. Very low variance, very high return above zero. And eventually, if you take your profits off the table until you reach break even, eventually you'll have zero bad risk, no risk of loss to your original investment principal. This becomes safer than buying bonds, okay? Now, when you're at the gold level, that's where you get the hand-holding. This starts with a one-on-one mastermind session where we analyze your current starting point and then create a fast track to not just 100,000 passive income, but to accelerate your path to the $1 million mark so that you can get into the level 2 managed buy-sell programs that pay 20% per month or more. These are contractual returns. Your principal is never put at risk in trading, but you have to have over $1 million in capital, free and clear, sometimes more, to be able to access these managed by sell programs, bank trade programs, matched trade programs. It's another name for them. So 20% per month on $1 million, that's $200,000 of passive income per month. We call this level 2 investing because it is a whole different level of investing. And at a certain point, it comes with a project funding requirement, meaning you have to use a percentage of your trading profits to fund a project that you bring to the table. This is how you can fund your $100 million humanitarian project, not with equity, not with debt, not with other people's money, but with the trading profits of your own money, and you own all of it and control all of it. Now, the only requirement is that the project creates jobs. We prefer that it be a high-impact humanitarian project that does a lot more than just create a couple of jobs, but rather helps solve the root cause of problems that plague society, giving a permanent hand up instead of a temporary hand out. Now, if you design the project to become self-funding over time and to help people that are going through a worst-case scenario, then you've just created and funded an asset that will continue to produce income in a worst-case scenario. Yet you own and control it. This becomes part of your legacy. I hope you get what we're saying here. Now we have a section for advanced asset protection strategies and tax minimization strategies so that you can form the trusts and the foundations for your humanitarian project. Now these tax minimization strategies, they enable it so you can legally get to keep all of it now. You don't have to give half of it to the tax man. And you don't have to take it through probate when you pass it on to your future generations. Now, this is a key to establishing your long-term legacy. We also provide in-depth training on how to incubate your first $100 million humanitarian project. You eventually want people to be able to form their own private offshore banks and captive insurance companies, because then we can have a consortium of private offshore banks and captive insurance companies where we can then tap into asset monetization and fractional reserve lending with more control and lend into existence our own money for our own steady supply of high-impact humanitarian projects. Now, if you didn't follow what I just said, that's okay. That's under the advanced strategies of our members-only resource area. So that is what comes with the F3 Mastermind Group membership. On top of that, if you are a decision maker that can recognize value and act on it in a timely manner, we are offering you a 10% discount. But that's only good for 48 hours. That's not going to be up there forever. So the gold level is only $8,997 for you, saving you $1,000. And the silver level is only $35.97, saving you $400. Now, incidentally, if you join at the silver level and then upgrade to gold later, the upgrade cost is $5,997. So you're better off just going straight for the gold now if you're not going through financial hardship currently. Now, the coupon code to get the 10% discount is F3, Foxtrot and the number 3. But it's only good for 48 hours. Okay? To lock in that discount, just click on the link below, on the button below here. Just click on that. Now, sometimes credit cards have a max limit per transaction. So to accommodate that, we created a 2-pay option where you can pay in 2 installments, one now and one in 30 days. Now, with the 10% discount, the 2-pay for the gold level is 2 installments of $4,677. And the 2-pay for the silver level is 2 installments of $1,867. So you don't get as much of a saving, but convenience doesn't usually come without a price. Now please note that if you select the 2 installment option, then certain parts of the website will not be available to you until after you complete the second payment. We'll cover that more in a little bit. Again, the coupon code to get the 10% discount is F3, but it's only good for 48 hours. So to lock in that discount, just click on the button below. Now, sometimes people ask, if this is a humanitarian project, why do you have to charge so much? It's a fair question. 2 reasons. Number 1, we have to weed out the tire kickers, the looky-loos that are unable to assess risk and make a decision. At F3, we put ourselves at risk every time we share a resource that we use. We don't want tire kickers. We don't want the wrong kind of person abusing our resources, and that's why we have to weed people out. If someone cannot invest $10,000 to join our group, what makes us think they would ever invest $100,000 or $500,000 with the traders that they access through our group? So weed out the tire kickers, that's number 1. Number 2, it's important to make your humanitarian projects self-funding so that they can run long-term, perpetually, and not be wholly dependent on you financially. So we practice what we preach. We've done that with this humanitarian project, the F3 Mastermind Group, to make sure that it is self-funding. We have overhead expenses we have to cover, and we have staff we have to pay. For example, our Director of Operations has a phenomenal background. He comes from a top-tier asset protection and wealth management background for high net worth clients, working with one of only 2 firms in the U.S. that do what he did. This included structuring offshore captive insurance companies for his clients. He has a degree in finance, is trained in Six Sigma or Lean Consulting, and was a project manager at a Fortune 50 company. He has started or restructured several companies. He's just phenomenal, stellar. Our Director of Technology is equally phenomenal. He owns a search engine optimization firm. He knows internet marketing inside and out. He's just a whiz on technology. And this goes into what you see on the F3 Mastermind Group website, as well as the efficiency in conveying information to you in real time, so it's very easy for you to gain access to it. And this is just some of our staff. They have people that they manage. This is a sample of the corporate overhead expenses that we have to cover, which is why we charge a membership registration fee. Now, currently, it is a one-time fee for lifetime membership in our F3 Mastermind Group. We might change that in the future and make it annual, but right now, it's just a one-time fee. So be sure to take advantage of that, because once we make it a recurring annual fee, you'll be grandfathered in and won't have to pay that on a recurring basis. Now, some people ask, what is it that F3 offers that investment newsletters or other groups that talk about passive income don't have? Well, we have traders and vendors that are unique to our network. We have traders, vendors, and resources that other groups just do not offer. We have a network of resources that we've personally vetted out and have developed these relationships over time. Now, sometimes we can get exclusivity on very high-performing traders unique to our group that do not normally let small retail investors in. We have specific ingredients for a very specific result, which cannot be replicated anywhere else. We don't just provide the where to, meaning where to go for traders and vendors, but we also provide the how to implement it. A more customized service that no one else offers. So if you want to join F3 Mastermind Group and get the benefit of the resources that are handed to you on a silver platter, saving you the time and the expenses that I had to incur in order to figure all this out, then please do join by clicking the button below. Now make sure you use the coupon code F3 so you get that discount. Now when you click on the button below, here's what happens. You're taken to the checkout page. Make a mental note. The coupon code is F3, okay? So click on the button, and it takes you to the checkout page. As you can tell, that's the price right there. Now here you see the 1 installment option for the gold, and we have a 2 installments option over 30 days. Because sometimes, again, people's credit cards have a maximum transaction size that they allow. So it would be 1 payment now and 1 next month. Now please note, like it says here, if you choose a 2 installment option, certain parts of the website will not be available to you until after you complete the second payment. This is with both the gold and the silver levels. For this example, I'll leave it on the one installment option. Now on the next page, that's where you type in the coupon code. So one installment option, type in your email address. I'll use our admin email as an example. Okay, and proceed to checkout. Click on the button. Okay, so here's where you enter in the billing information. Here you have the membership agreement. Read that. And here below, here's where you put in the coupon code, right there. Now watch when I click this. Type in F3. Apply coupon. Double check up top. Shazam! Look at that. Nearly $1,000 discount right there. But that's only good for 48 hours, okay? As you can tell, the clock started ticking already. So after you scroll back down, accept the membership agreement terms of service. Then you click the button that says Pay Now. PayPal is our preferred payment processor, so that's the only option enabled in that field. After clicking the Pay Now button, you'll be taken to where you enter your billing information on step 3, where you finish making payment. Okay? After you complete the F3 membership registration payment, there will be a place for you to fill out the new member questionnaire. Please complete the new member questionnaire. After completing the new member questionnaire, you'll have received your username and password to log in, being sent to the email address you used in the registration process. Make sure you use a valid email in the registration process, otherwise your login will get sent to cyberspace. Once you log in, here's the first page you'll see, the login welcome page. You're given step-by-step instructions what to do. Step by step. Some people, they like to be maverick and bounce all around without thoroughly reading anything. As usual, that's a recipe for disaster. Don't be a maverick. Please be methodical and thoroughly read through everything first. I mean everything. Follow the proven protocol, as that is a recipe for success. Now, there is a fair amount of preparatory work we'll have you do to build a firm foundation before we even schedule a mastermind session with you. Now, once you understand how the basic pieces fit together, your personalized application of them becomes quite self-evident. We call it systematized customization, and I'll show you what I mean. You remember that the two levers of wealth creation are massive capital and return on investment. So you start off with step 1, which is the funding tab for all of the nuanced ways to build up your massive capital. Now, which of the many methods do you do? Well, hopefully all of them, so that you build up your massive capital as big as possible and as fast as possible. So here you have personal equity. That could be a 401k, IRA, equity in real estate, or just investment accounts that you already have, or cash just sitting around. You have other people's money, PG funding, personal guaranteed business funding, non-PG, non-personal guaranteed business funding. At the bottom of this tab is where you have the credit partner PG, which is non-PG to you. Now here we have credit repair, in case you or a potential credit partner have credit issues that you need to improve, like removing collection accounts, foreclosures, bankruptcies, etc. There are legal and lawful ways to do that. Now here we have on the same tab the asset recovery, because sometimes people have lost money in scams in the past as part of their tuition in the School of Hard Knocks, or maybe in bad investments before they ever found us. But what they don't know is that there are ways to get that money back, even if the offenders have seemingly disappeared. Got to remember, we live in a digital world where everything is tracked, especially money flows, and officials can track down whomever they want to. So we have a stellar asset recovery group that we work with, and for a very low fee, they're very good at recovering lost investments, so to speak. So that is a huge resource. Here is the internet marketing training that we mentioned earlier. We even have a training on how to get silver from banks for free. Now next, sometimes people need to set up legal entities. So here's where we have the entity training. We have basic, intermediate, and advanced. So if you have any entity-related questions like how do you structure for taxes or how do you structure for legal protection, this is where we answer those questions for you. Okay? So for taxes, we work with a phenomenal CPA firm which you can also use. And they handle all tax-related issues for you, both U.S. and non-U.S. clients. Okay. Next, we have the Rolodex of traders. This is where we list the traders that we use. We have 15 traders, more or less. Sometimes we have more, sometimes we have less. We have a really long list of traders that we're still vetting or performing due diligence on, so the list is always increasing. But as you can see, the categories here are in Forex, stocks, stock options, and futures or ETFs. Now I want to be very real with you here. The only constant in life is change, and things work until they stop working. So sometimes traders who have performed well for years, they stop performing. Now if you have only one trader, and you just happen to get them right before they die or get into a car accident or they decide to retire, then your entire investment portfolio is ruined if that's your only trader. But if that same trader is just 1 out of 10 or 1 out of 15, you're like, yeah, no big deal. Small hiccup, no big deal. You recover quickly and you move on. And that's why risk management is so important. Now the providers tab here, that's where the trader's contact info is listed. You can call them up, you can email them, go to their website. That's where you get the performance information. It's from the traders directly or the introducing brokers that represent the traders. Now here we have the downside scenario protection planning. This is what to do in an absolute worst case scenario. We're talking about a sudden collapse of the global financial system, doomsday type scenario, okay? And here's what you do. It's a very detailed step-by-step exactly how to prepare so that it helps you instead of hurting you if that scenario comes to pass. Matter of fact, the humanitarian projects themselves are for worst-case scenarios. You're helping people who are living in a worst-case scenario right now. So as you incubate humanitarian projects, you're actually creating assets that are so durable that they'll survive any worst-case scenario. And they'll be hyper-efficient, hyper-productive assets. So you'll be one of the few games in town providing value. So it's a very strong situation to be in, a very strong card to have in your hand. Now through the humanitarian projects, we're creating robust, self-sustaining local communities and local economies so that we have the reserves necessary to be able to weather the storms, so to speak, making our societal systems less fragile. And when it comes to the humanitarian projects, it's all about centralization versus decentralization, moving away from a fragile system of centralized power over others, the monopolistic behavior where wealth is only accrued at the top, and instead moving towards a system of decentralization with robust local entrepreneurship and self-reliance, local economies where the masses create the wealth and get to keep and reinvest the wealth that they create in whatever manner they see fit. Now for the economic nerds, we're basically discouraging the corporate capitalism promoted by the Keynesian model of economics and instead promoting the true private free enterprise of the classical or Austrian model of economics, which causes robust economic growth and expands the economic pie in the hands of the masses. So we have an incredible amount of training on how to structure a humanitarian project, the theory behind it, an incredible amount of resources if you want to include in your project elements like food, water, shelter, education, entrepreneurship, income generation, microlending, health. When you expand each of these, you'll end up having a good 10 to 20 pages of resources. Now most of these are videos or linked to websites, so you can brainstorm and maybe include some of them synergistically in your projects. Next is the bank trades, the managed buy sell programs and how they work in detail. Down here, we have a link to a document on the New Zealand Parliament's website as irrefutable proof that these programs do exist and that governments do know about them, at least New Zealand's Parliament does, and exactly how the returns are generated and what type of returns are typical of these managed by sell programs. Down here is a documents and files section where we have simple business plans for humanitarian projects to help you brainstorm and give you an example of what to do. These are firms that will help you organize your ideas and actually write your business plans for you, and there are executive search firms that will help you assemble a strong management team. Now of course, this comes later on. You don't start here, you end up here. We also have advanced concepts. These are the F3 endgame that we mentioned, working together with you to create a consortium of private offshore banks and captive insurance companies owned by members of our F3 mastermind group, as well as the offshore elements, all the questions that people have about staying compliant with the Patriot Act and FACTA, compliance with the IRS. Always do everything legal and lawful and above board. We have a list of professionals that can help you stay compliant at all times. Okay? And here we have the recommended readings. The purpose of these books and videos is to increase your internal capabilities so that by the time you're externally ready for the level of stewardship of the larger humanitarian projects, you're internally ready for that level of stewardship as well. This is how you eradicate from yourself the poverty mindset and scarcity thinking, and instead you drink in and soak up the prosperity mindset and abundance thinking. You'll clearly see that good intentions with the wrong kind of understanding can actually cause worse problems that they're trying to solve, as demonstrated in the video that Hillsdale College put together on the underlying causes of the Great Recession of 2009 and the ensuing global economic downturn that still plagues our society. Now we have links to the books and videos, some of which you can download for free, some which you can purchase cheaply on Amazon.com. Quite a long reading list here, actually. And we also have a massive glossary of all the financial terms you would ever come across in the readings or in working with any of the traders. If at any time you do not understand the technical terms that they're using, just look it up here. You can figure out what they're saying. We have an even larger collection of frequently asked questions, or FAQs. 99.8% of the questions that people have are the same questions that other people have had as well. So we've pre-answered them for you. If you have a question or an issue that we have not already answered and one of the corresponding service providers cannot answer it for you, or if you get stuck, who's there to help me, you might ask. Well, what do you do? What you do is you can scroll down to the bottom of any page and submit a ticket, a support ticket. With support services, member support services right here. We have our director of operations and we have staff that works under him, and they usually respond within 24 to 48 hours unless it's a weekend. Now actually they have not had a whole lot of support requests lately because they've answered everyone's questions in the FAQ page. But if you do hit a roadblock, let them know. They'll reply to you. They'll get back to you. If they cannot solve the issue, then they'll escalate it to me. And if necessary, we'll do a one-on-one sit down, figure out what the issue is, and create a workaround for it. I have yet to find an issue for which there's not a workaround. We always have backup upon backup because redundancy is the key. Okay? And here we have some sample cherries that you can look at as very efficiently run organizations. You can copy from their playbook in terms of a business model for your project, or you can look for ways to improve upon them, because I can guarantee you that even these, as well as they're doing 1/10 of what their capability is, just because they don't have the kind of resources that we put on a silver platter on the humanitarian projects page. Matter of fact, I spoke with the director of one of the charities that we're helping, and instead of giving them money, I gave them some of these resources. on this page right here. And he said, you gave me diamonds. What you gave me is worth more than money because I gave him solutions. Not just handouts, but actual solutions. We also gave him some money for some of their short-term needs, of course. But yeah, this is very powerful. This is what's inside the mastermind group. Okay? So if you like what you've seen and it makes sense, let it make dollars for you as well. Go ahead and claim your winning lottery ticket and take action now. Click on the button below and remember to include the coupon code F3 for your huge discount. It is time sensitive. It will be the best decision you've ever made. Exiting the employee quadrant and putting yourself solidly into the investor quadrant will change your life trajectory. It'll enable you to create a legacy for generations to come. Let today be the first day of your tomorrow. I look forward to seeing you on the other side and formally welcoming you to the F3 Mastermind Group. Go ahead and take action now.